Hey you guys, welcome back to the show. My name is Brad. This is the Firefighter's Financial Toolbox. I had a viewer ask about MLPs. MLPs are master limited partnerships. And to be quite frank, I didn't know all that much about them. I know that they are partnerships that are different, and a lot of them are involved in oil. So I decided I'd review this article and maybe answer some of the questions, not only for him, but also for me. Investing in MLPs. Yields are high, but complications are many. Master limited partnerships are all the rage on Wall Street, known for high yields, favorable taxation, and exposure to a very popular sector, oil and gas primarily. MLPs are the new designer drug for enterprising investors. Let's work through the basics of MLPs, their tax structure, and their suitability in your portfolio. So first of all, what is an MLP? A master limited partnership are investment partnerships, not corporations. A partnership is an arrangement between many different partners, usually are one or two general partners who control the decision-making and operational decisions, and then limited partners. You would be a limited partner if you were to buy an MLP unit on the stock exchange. MLPs, as we know them today, are primarily involved in the ownership of oil and gas assets, mostly pipelines, but they can also own things like oil refineries. These partnerships manage these commoditized assets, collect income for their use, and then distribute that income to the general and limited partners who participate. Okay, they've become popular because they offer exposure to the oil and gas business with different kinds of risks, whereas exploration companies' profits are almost entirely tied to the price of the oil or gas. So if you have stock in Exxon, if gas prices tank, the stock goes down, right? MLPs tend to have much more stable revenues in that their income is not tied to current level of prices because they have to move the oil or the gas from here to there or refine it, right? So it's always going to be needed. MLPs bring interesting tax advantages that create an income stream with minimal taxation. So let's dig into the taxation. MLPs and taxes. MLPs are also very different from any other security you might buy or sell. When you own shares in a corporation, nearly all of the companies on the stock exchange, the income the corporation earns is taxed at a corporate tax rate. If that income is then passed to the stockholders, the owner pays dividend taxes, which are right now lower, right? Capital gains rates, 15% for most of us because they're qualified dividends. When you own shares in an MLP, you are a member of a partnership. That means that all the accounting happens on your income statement. Let me say that again. You have to take care of it because you are a partner. Whatever the MLP earns is passed on to you without corporate income taxes. Instead, MLP profits are recorded by you as a normal income, and thus the income is subject to your normal income tax rate. But stop right there. There's even more tax fun in the land of MLPs. Most of the money that comes back to you is not an accounting profit. Most of the money the MLP distributes to unit holders is untaxed. So how does that work exactly? MLPs leave you with an IRS form K-1, the partnership form. When an MLP makes a distribution, think of it kind of like a dividend. The MLP returns income and a return of capital. What this means is that only a portion of what comes out of distribution is considered income. Most is a return of capital, a return of your invested dollars. So you're not really getting things. Some of that is the money you've already spent. You see, MLPs are not corporations, and they're involved in very capital-intensive businesses that own capital assets like pipelines. These assets depreciate. If they depreciate a normal corporation, the corporation could take the depreciation charge in the accounting. The company just distributes this cash is based on retained earnings, which accounts for the depreciation in an MLP. All the cash is sent back, even the part that should be earmarked for depreciation. In other words, they're sending some return of capital so they don't depreciate it. It kind of goes to you. You buy units of an MLP for $10,000. The MLP sends you distributions of $1,000 the next year. On the K1, you find that $800 of that was return of capital, and $200 was income. Only the $200 is taxable, and it's taxed at your ordinary income rates, kind of like REIT, you guys. The remaining $800 is not taxed yet. The $800 remaining dollars is just your money that is basically being returned to you. The IRS charges a return of capital against your cost basis. In this case, your cost basis would fall to $9,200. So your cost basis is actually adjusted down for the amount of the return of capital. So that $800 was taken off. Only when your cost basis falls to zero will the return of capital's tax be taxed. And then they're taxed at capital gains rates or long-term rates. Hold for the long haul. An MLP investment has to be a very long-term investment in order to get the full advantage of the setup. When you sell an MLP, let's say you sell your shares in the future for $10,000, you have $800 of return capital that is recaptured by the IRS. The return of capital is taxed as ordinary tax rates. So in short, to maximize the value of an MLP, you want to hold for years and years to push off the recapture as long as you can. If you have any familiarity with real estate depreciation, you'll understand this concept. The return of capital is essentially a tax-free loan that can be reinvested and which will not have to be repaid until it is recaptured when you sell your MLP. Are you dizzy yet? I am. Here's why I'm not a fan of MLPs. This is the author, you guys. I'm just reading it. Number one, it's bad for IRAs. They're really not suitable for an IRA because of rare but possible unrelated business taxable income, and MLPs are already designed to be tax efficient. That's why companies like Kinder Morgan have made LLCs which own MLPs so you can invest more tax efficiently in your IRA. In other words, this is one that you can hold even though you're going to get taxed on a little bit of the distribution. Most of it isn't, so it's not. So this is more of a taxable investment. Okay, waiting on the K1. K1 forms are usually distributed in March, which means you'll have to completely lose the idea that your tax return will be filed early. If you need your income tax filed early to beat financial aid deadlines, MLPs are going to get you out of that window. They're also complicated investments. MLPs are tremendously complicated investment vehicles that require far more research than other investments. In the time it takes you to evaluate an MLP, you could probably have researched 5 publicly traded companies. The taxations are complicated. You have to do the K1 form, which are complicated for people who have not filled them out before. That adds accounting cost if you use a CPA. There's long-term tax implications. To get the most from an MLP, you have to buy and hold for a very, very long time. The revenue, income, and whatever the MLP may fundamentally change in a short time after buying. Yet to have the really good benefits, you'll have to hold it until years after your purchase. Also, fake yields. Advertised yields aren't really as good as they appear, since distributions are taxed as income. Yields from MLPs aren't exactly comparable yields from untaxable municipal bonds or dividends, which are taxed at a lower long-term rate. So even though you're getting some of that, remember you're getting taxed at ordinary income, so it's not as tax-friendly, and the resultant yield is going to be lower than it says. If it says it's 4%, once you pay the taxes on that 4%, it's really maybe 3%. All that said, if you have a very large amount of investment capital and you're willing to dive into each and every nook and cranny of MLP filings, complicate your tax returns, and tolerate holding asset for years upon years, MLPs make fantastic investments. I would think most retail investors wouldn't be willing to clear those hurdles, however. All right, you guys, I've learned a lot in this. What about you? Do you guys hold MLPs in your portfolio? And if so, what kind of MLPs? I'd really like to know in your comments. If you have them, let me know. If you're thinking about them, let me know. And if you are thinking about what kind of MLPs are you looking at? All right, you guys, I hope you got something out of this. I know I did personally. If you did, do me a favor, drop that like on there. It really helps the algorithm. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. You get notified every time I make a new video. I try to make one at least every week. All right, thanks a lot. We'll see you.